Jefferies chief market strategist, CNBC contributor David Zervos joins us now to talk through some of this data we've been getting, David, and how the market feels like it's more worried about the bad data, pricing in a hard landing. What do you think?
I think we're a long way from that, Sarah. I listened to all the discussion, and I've had a lot of client discussions post a number. I'll give you one stat that caught my eye. Throughout the entire 1990s, up until the summer of 1999, the unemployment rate was above 4.3%. So we spent 6 months below 4.3 in the entirety of the 90s. I think we have to think about a level here and understand, and Jay said this in the press conference on Wednesday, 4.1 and 4.3 as well are still really low in the grand scheme.
It's a change. It's how fast it's changing.
I get it. I get it, and the SOM rule is a statistical regularity. I think that was the words he used. You were discussing that earlier in the show. But no hard and fast law of economics, that's for sure. So they're watching. I actually think this number makes them pretty happy. I think this is the path to normalization that they've wanted. They're going to be happier if they get some reprieve on the inflation data in the coming weeks. And really, this is all about Jackson Hole. We're going to get a signal at Jackson Hole, I think, about the path of rates. We pretty much knew September was a lock. Now it's almost guaranteed a lock. The question will be 50s. I think 50s jumping the gun. But the most important thing I would say is he didn't want to give guidance on the path. I think actually Steve Leisman asked him that question, if I'm not mistaken. And I think that's where he could really actually give you some dovishness and relief in the market if people are getting nervous about a hard landing, to say, hey, guys, we could go pretty quickly. We could kind of go 25, 25, 25 the rest of the year. We got a November and a December meeting. If this data, if this negativity persists and we're at 4.5 or 4.6, 4.7, hey, we got plenty of room to go.
I mean, it just seems like this is a Fed that hasn't been willing to commit to a path. Similar to the ECB, no predetermined path, data dependent, because they genuinely don't know what is appropriate right now, and they need to make sure that inflation comes all the way back down and we don't go into recession. It's a tricky balancing act.
I agree. Although I will still say, I'll go to the mat. I'm giving them, an A for this. I think they've had done an incredible job at threading this needle. We were at almost 9% CPI inflation pushing into 2022 in the summer, and here we sit. In the end of the summer, or almost the end of the summer in 2024. And in 2021, we peaked at 9. So 3 years ago, it's been an incredible run, and we're still sitting here at a 4.3 unemployment rate. Kudos to the Fed. I think they would not be looking at this decision that they made on Wednesday and saying, oh, darn, we should have gone because of this number. Remember, one data point doesn't really move the needle, but they need to give the market some comfort with the path. And he did that a little bit on Wednesday. I think Jackson Hole could be quite dovish on the outlook for the path of interest rates. And that probably soothes risk assets and stops some of the bloodletting that we've seen. And Sarah, remember, the S&P is still up 10% for the year. It's not like this has been a slouch of the year.